In today's Money Watch, it's the official start of tax season, and CBS News business analyst Jill Schlesinger has everything you need to know. Jill, good morning.
Good morning.
All right, let's get right into it. What can people expect this year?
April 15th, that's where we're looking at, and it's been delayed a couple days in previous years, April 15th. However, if you are a victim of the LA wildfires, you will have until October 15th. Oh. If you are a victim of Hurricanes Milton, Helene, check the IRS website. There's been some extensions about a month or two. Very important to do that. And know that if you really can't make it by April 15th, everybody's entitled to a 6-month extension. The extension is to file, not to pay.
All right, good information. Last year, the average refund was just over $3,100. What's the best way to make sure you get that money quickly?
I don't want you to even want that money, but because you've just lent Uncle Sam money for a whole year when you could have had that money sitting in a savings account for 4%, but you want to file electronically, use direct deposit. You'll get that within 21 days of filing, according to the IRS. So make sure you do that. It's very easy to do.
This is also the time of the year where people get hit with a lot of ads for different agencies that will help them file. When do you use a professional? When do you do it yourself?
It depends on the complexity of your life. Some people think it's just, oh, I have a lot of money versus not. But if you're just a wage earner, a W-2, by the way, keep your eye out for all these tax documents. They come via snail mail very often. But if you're a wage earner, you could probably do it yourself. If you have some complexity, you own a business, you are self-employed, maybe you sold a piece of real estate, you have to file an estate tax return, you may want to hire a professional. Do it now. The IRS has some tips about how to look for a professional and what is considered a legitimate tax professional in this day and age.
Why is it so damn complicated?
I don't know. I want it to change also, but I wouldn't be with you if it weren't.
Very quickly, free resources available.
Oh, my gosh. Vita, tax counseling for the elderly, and mill tax, 3 great resources, all on the irs.gov website.
Jill Schlesinger, always great to have you. Thank you very much.
In today's Money Watch, we are talking about the new tax season. Most Americans have from now until April 15th to file their 2024 tax returns, pay any taxes that they owe, or request an extension to file. If you've been impacted by the LA fires or another natural disaster, check the IRS website for more information on possible extensions for you. CBS News business analyst Jill Schlesinger joins us now for more on all this. Jill, great to have you here. I know people don't like tax season, but it is upon us, and we can tackle it with expertise. What documents do people need to gather to do it?
First, take a deep breath. We get in our heads about tax filing. It's really not as hard for most people. So
it's very intimidating.
It is, absolutely.
It's a little nerve-wracking for a lot of
So what you
folks.
want to do is get the right information in front of you before you start. So that means all of your income statements. If you're an employee, a W-2. If you're an independent contractor, 1099s. If you've gotten unemployment insurance, you'll get a form for that. If you've claimed Social Security, you'll probably get a form for that. Pensions, retirement distributions, all of these things, get it in front of you. And if you are going to itemize your deductions, you're going to have forms like property tax notifications and also your mortgage documents. Don't start until you have all of these documents. Otherwise, you're going to be spinning your wheels.
Now, we keep hearing there are new rules for people who file online. What are they?
So it's
and who are making money online.
Yeah, it's amazing. We all see friends who have like side hustles. Oh, I got an Etsy account, or I'm selling tickets
Got
online.
a marketplace online.
Got something going on.
A side hustle
which is,
that becomes a big-time job.
Yeah, and it's amazing. Now, it used to be that you had to make more than $20,000 from these services to have to file a form. Now it's down to $5,000 this year. So keep an eye out for this. And if it's going to $2,500 next year, $600 the year after.
Why are they lowering it?
Because they want more people to file. And to be clear, if you don't receive a form, you should claim the money anyway. This is very important because you don't want the IRS to come after you and say, oh, we got their form late. So if you didn't even get the form, make sure you file that income.
But Jill, part of the stress of tax season is fearing that you're not getting all the deductions or credits that you should be getting.
Right.
So what are the obvious ones that people miss?
The IRS just released this fascinating report, which basically said, they looked at every credit, every deduction. They said people are leaving billions, not millions, billions of dollars on the table. So I just want to point out 3 big credits that are very important. The Earned Income Tax Credit, that's a biggie.
Okay.
That's the most lucrative one. The Child Tax Credit, and then there are a number of credits for higher education. If you put together all the money that should have been claimed, that wasn't, the IRS says it totals more than $7 billion. People, look out for those credits. They are valuable. You don't have to owe money to be entitled to those credits.
Don't leave that money on the table.
No,
Right about
absolutely
that, Jill. Thank you so much. We appreciate
Sure.
you. In today's Money Watch, we are talking about your taxes. So listen up. Most Americans have until April 15th to file their 2024 tax returns, pay any taxes owed, or request an extension to file. According to the IRS, 61.4 million tax returns have been received, and more than 60.7 million have already been processed. CBS News business analyst Jill Schlesinger is here. Good morning.
Good morning.
All right, so about 7,000 IRS employees were laid off last month in the Trump administration. They are planning for more cuts. Should we prepare for delays this tax season?
Well, I think the best way to avoid a delay is to file electronically.
Okay.
Use direct deposit, because if you're due a refund, that's the quickest way to get it. And the IRS has been pretty consistent. When you do that, you usually get a refund within 21 days of filing. However, and here's my asterisk, remember in COVID when there were so many delays? Those delays were usually about people who needed physical eyes on a return. So if you have a complicated return and it requires an actual agent or a representative from the IRS to look at it, there could be delays. So that is why this year, for the first time ever, I think I am saying, even if you owe taxes, I would try to get my tax filing done sooner rather than later, just in case.
Well, everybody looks forward to a refund. It's like fingers, eyes, legs, toes, cross, please, please, please. But we're hearing that the average refund is a little over $3,300. That's an increase from last year. Why do you think that is?
Well, it's mostly because of inflation. So when we have inflation, the IRS will automatically change certain things like tax credits, and they will also change the actual the brackets, not the tax rates, but the brackets get larger. But as you guys know, even though you all pray for a refund,
I know I heard from reliable sources, Jess Connor, you don't like the tax refund.
I hate them.
Why?
Well, I think that when you have a tax refund, you've got to reframe it. It's not like you found free money. It's that you've given Uncle Sam your money for a full year, and you haven't been paid interest for it. So instead of that, I much prefer people have that money in their hands during the year. Because if you have that money during the year, number one, you can pay down debt, which is super important.
Utilize that money.
Number two, you might be able to earn interest on the money. Number three, you might be able to kick up the contribution to your retirement account. So if you get a big refund, one nice thing to do would be, hey, let me change my withholding. Let me hold on to my money during the year. You might be the most patriotic person in the world. Keep your money.
On the retirement account question, what's the difference? I always mix this up between an IRA and a Roth IRA.
This is the time of year when a lot of people are really going to make that decision. So a traditional IRA means that when you put money into the account, the money you put in does not get taxed. So you get a tax deduction today. Later in life, after you're 59 and a half, and you take that money out during retirement, that is when you are triggering a tax, okay? A Roth IRA, you're putting money into a retirement account that has already been taxed. So you don't get any tax deduction today. But for all the years that it grows, there's no tax that's due. When you take it out later in life, the Roth money has already been taxed. So what's cool about this is, especially if you're younger or you expect your income to rise, you've already paid your tax at a lower rate, and you never have to pay tax in the future. Another thing is, even if you make a lot of money, the reason why a Roth is powerful is that you know what your tax hit will be. And that knowledge can help you down the line when you're paying for Medicare and you're paying for your own retirement.
Knowledge is power. Jill is power. Thank you very much. It can be great if you're looking for advice on DIY, if you're looking for new recipes, but when it comes to doing your taxes, you might want to look somewhere else. The IRS is sounding the alarm, urging people not to take tax advice from social media at face value because it could end up costing you more than you bargained for. Josh Sidorowitz from CBS News Philadelphia has the story.
Follow me for more tips like this.
Scroll through social media and you will find all kinds of tips to file your taxes. Some
Most people don't know this tax secret.
claim tapping into obscure credits can even net you bigger refunds, from writing off your car or even your pet to hiring your own kids. But tax professionals caution following some of it could lead to fines and delays getting any refund you're actually owed.
There's just enough truth to be dangerous.
There's usually some credibility in the claim, the credit, the deduction. It does exist, but not the way they phrase it, and certainly not with the way they're intending it.
The problem prevalent enough now, the IRS says it is stepping up reviews of returns that claim these other withholdings, saying instead of looking to ill-informed information on social media, speak to a trusted tax professional. More than 500,000 taxpayers at the end of last year were still waiting on their refunds that were frozen for review by the IRS after claiming credits they potentially weren't eligible for. The National Taxpayer Advocate's annual report to Congress in January partly blaming misinformation on social media. Jackson Hewitt Chief Tax Officer Mark Stieber says the biggest mistake people make is not claiming credits they do actually qualify for, like the earned income and the child tax credit.
Here's the thing that people don't really fully appreciate. If you leave off an income item, if you leave off your crypto, the IRS is generally looking for that and you might get a question. But if you leave off the earned income credit, which about 1 out of 5 do every year, or you leave off a deduction related to your self-employment, the IRS doesn't say, oh, wait a minute, they don't add back deductions. They don't add back credits. You don't get a bigger refund from the IRS. You leave it off, it stays off.
And a lot of people are leaving a lot of money on the table. The IRS said in just 1 year, eligible taxpayers left more than $7 billion unclaimed, and that was just for the earned income tax credit. This year's filing deadline is April 15th. I'm Josh Sidorowitz, CBS News, Philadelphia.